Welcome to There's Insurance for That, your number one destination for all things relating to the world of insurance. We are your hosts. I am Nate Brown.
And I'm Edwin Moreno, and today we will be talking about insurance claims.
Claims. Ah.
The claim,
There's
the
a scary
claim
ring to
world.
it. It's like one of those bittersweet things. Like we don't like to file claims, but we're glad we can file claims if we got insurance. So it's one of those things. So where do we begin? I guess,
I yeah,
what what
I
are
got I got some things. Well, I think there's a couple places because everyone has car insurance, everyone has, because it's the law, everyone that has a home has to have homeowners insurance. Those are very common things, and I really do like I want to talk about that, maybe like some business insurance claims too. But I think before we get into that part, because there's a lot to cover, something I've been very curious about is like, I mean, honestly, a life insurance claim. You've been in life insurance long enough to where maybe you've paid out, not you out of your pocket, but one of your carriers has been
yeah.
like, hey, there's a loss, someone passed away, and you got to go drop that check off. And it's like you said, like we don't want to file them, but especially something like that, it's like you write a life insurance policy, you hope for the best. And like the insurance, like that's what it's supposed to cover, right? Like
The
mortality, like if
inevitable.
you when you die, like they're supposed to
Yeah.
be. Have you given any of those checks to anyone? Like, have you done that?
I have had people pass away that have had insurance. I didn't physically give them the check. They were in
Okay.
another state. So
Oh,
the
they're in another
short
state.
carrier sent it to them. The cool thing about most of the A-rated carriers that I work with though is they do have like a 24-hour policy. So the moment they get the call that someone's been deceased and they get the death claim is sent to them, like from a doctor or from a police report or just whatever it may be, then 24 hours the check is sent to the beneficiary, or beneficiaries, so that they can handle whatever needs to be handled, all the funeral arrangements and all that stuff. That
Right.
the check's already in hand, they know what they're working with. So that's the good thing about it. So like it's like night and day. I mean, you are either going to go into debt and God forbid try to do a fish fry and a GoFundMe, or which we gotta stop doing that.
We gotta stop doing that.
We gotta stop
We
doing
gotta
that.
completely cut that out
Yeah,
of our
you
vocabulary.
cannot be doing GoFundMes for funerals and fish fries. Like
Right.
we had enough fish.
Right, right,
Let's
right,
just
right,
get it
right. I've seen
simple,
enough
bro.
raffles.
Right.
I've seen enough raffles, people raffling off just random stuff to try to
Yeah.
just to cover the funeral expenses, right?
Yeah, just a final expense policy. Those are just for funeral expenses, but not to get into the different types, but the claims that you can do in the life insurance world is basically that. It's like, hey, somebody passed away. You said you're going to give me whatever money is there as a beneficiary, cut the check. So they do that, and that's the end of the policy in most cases. Um,
Have they
only other,
called you? Like after they get the money, have you talked to them? Like have you talked to a client about that?
yeah, yeah, I have. They are, for one, they're like super like thankful, like grateful, like oh my gosh, like it was a breath of fresh air. Like I'm glad you represent good companies, good carriers. Like they lived up to what they said. It was hassle free. It was a phone call and a check in within 24 hours. Like it was pretty lickety split. And so that's cool. All you need is the policy number and name and date, and then you just confirm who you are as the beneficiary, your name, date of birth, and your social, and it's done. So that's the good thing. And it's quick. Now there is something that takes a little bit longer, depending on the carrier. The only other claim you can file is a living benefits claim. So in short, a living benefit claim is if I am unable to do five of the ADLs, which is activities of daily living, which if I believe is eating, toiletry, like using the bathroom.
Hold on. Let's flip that bad boy before we
Oh
forget.
crap!
Hey, we here. It's cool. It's cool.
We're
So,
here.
hey, we going back.
So,
Just for those that are listening, we got a timer that we always have, and this time we brought it up pretty close. So we had to make sure we had to make sure we flipped it over to keep track where we're at. So wait a minute. So there's five. So you're talking about there's a way that I could file a claim on my life insurance policy if I'm still alive.
yes.
Oh, I
Yes. Two
didn't know.
ways to use money from life insurance while you're living. Actually, three, but one is to it's almost like a health insurance in a way, but it's like, hey, if I can't feed myself or drink or clothe myself or move around and transition, for myself anymore, and I need the money, then I can call the insurance company and say, hey, I no longer can do these things. 2 out of 5, I need some money to help me get through.
Also,
Uh,
it doesn't have to be all five, just two out of the five or one
just
out of the
two
five.
Two out
Two.
of the five, yeah, 2 out of the 5. But the only thing, it has to be for a while. You can't just say, "Hey, today I can't walk and see." You know what I mean? I got $1 million policy. I need about 250,000 pronto. Like you can't do that, unfortunately. There is
Okay.
like at most carriers have like a 30 or a 90-day wait where you have to be in that condition, like documented by like your doctor. Like, okay, it's been 90 days and you're still jacked up. Okay, now we believe it's real. We're going to send you the money. So
Right.
that's one way you can file a claim and get money while you're living. And the other way is not necessarily filing a claim, but depending on the type of insurance you got, if you have like a high interest IUL or participating whole life plan, if you just have the cash value built in, you can just simply request for it to be some of that to be direct deposit to your account, which
And
is
is that technically is that filing a claim when you do that?
no, that's not
Okay.
technically filing a claim. The claim is only the living benefits claim and the death claim, uh,
Okay.
or they call it the death benefit claim and the living benefit claims. Those are pretty much the only two claims you can do. The other one is almost like similar to a disability claim. Like, hey, I can't do a few things, so I need
Right.
some money. So even if you don't have disability insurance, but if you do have life insurance with a living benefits rider, you can use that money while you're living to get you through some rough times.
Right. That's very and then the disability insurance claim is like the same thing. I can't do these things. I need money to cover me
Yeah.
for.
And,
Okay, cool.
and
So
even those have a window of time. Depending on the carrier, they may say 30 days, some may say 60 days.
oh,
Very
so if
few
you
say
get better in
90.
that time, they're not gonna pay you.
Yeah, if you're like, hey, I just was messed up for a week or two, I'm good now. You're like, oh, okay, well, we'll just keep things going until you're like really disabled for like a prolonged period of time, and then they'll start, they'll activate the claim and start paying you money out that way. Yeah.
Ah, that's very so I mean, I think for like people out there, it's important for them to think about like life insurance, that's one thing, but then also what kind of benefits does their life insurance policy have? Right?
Uh,
Because that's where I'm saying like some people might think, "Oh, I can only file a claim if I die." But it's like if you don't have the right policy where, something happens to you and you get injured where you can't function, right? Certain thing, yeah, you can't function in your policy. For example, if they go to you, like they could probably have those additional key, you know, additions, riders, whatever you want to call it,
yeah.
on the policy that will give them that coverage or where they could file a claim for those kinds of things. So, I mean, that's a pretty vast thing to think about in the claims world because even with me, like, there was something you were talking about earlier, like health insurance claims.
Yeah.
You were mentioning like the difference with like health insurance claims and um
Health insurance claims, life insurance claims, property and casualty claims, which I don't know how it works with like homeowners insurance or
Well, the
things like
auto,
that.
you were
But
comparing
auto,
you're like, why is it when there's a claim for my auto insurance, my price goes up, but when there's a claim for
yeah,
my health insurance, like the price doesn't go up, right? Well,
Yeah,
first,
what is that?
well,
Why is
first,
that? That happened
it's
to me recently. That's why I had that
right.
question.
It's it's not so that's not necessarily true because
Okay.
some some health insurance policies are based on like a group rate. And if your group, there's like, all right, I'm not going to get too like in depth with this, but like there's like self-funded groups, and then there's like groups, and self-funded means like they're using like their money to like
Hmm.
fund the group, and
Yeah.
then there's and it gets more complex than that. But ultimately, they look at like the health of everyone, right? And they
Okay.
look at like, okay, how much are they going to the hospital? How many claims are they filing? And they kind of come up with a number like premium based on that. If there's a group that is like not healthy and they're going to the hospital a lot, they're gonna pay more. That's just like that's just kind of like, and that's because like insurance is a business too. They're trying to make money ultimately, right?
Yeah.
So they're like, if this group has way too many losses, we're not gonna give them a favorable rate because they have too many losses. So there still is that
Gotcha.
effect in health insurance where it's like, hey, let's look at the group, and depending on how the group is being looked at, I think individually it doesn't really work that way because it's like if I have my own individual plan, like they're not looking at how much I'm using it. There's not a report that I get like, hey, you had this many claims. There's like there's no limit, but that's because of like the laws, health insurance laws have changed. So
So I'm sorry, I want to interrupt you, but I got a question. So, for example, if you got a group policy, a group health insurance, and your career is like we're working with boilers and asbestos and crazy conditions, I'm sure that group health policy is going to be a lot more expensive than someone who was like, we as a
not
group,
necessarily. They don't look at the work that they do.
we don't. So
They
is it
look
by
they
age?
They look at the age, they look at the health of the group, they look
Hmm,
at, so they don't look at the work. They
not the
can't
work conditions. Okay, that's good to
they,
know.
they can't look at the work. Not for health insurance. And maybe it depends on carriers. I'd love for someone to like correct me when it comes to that because like at least like for like the carriers that I've worked with, like they're not like, yo, they might want to know like the industry, but they're not really like that's not a major
Not a
concern.
major.
Like
Okay.
workers' comp, that's a big concern. Like workers' compensation,
Ah,
that's a huge concern. Like
okay. Big
if
difference
they're
in
like,
health then. Okay.
yeah, if
Gotcha.
they're like, yo, wait a minute, what's the scope of operation? They're gonna look at that and they're gonna say, oh, no, we can't give you this low rate because what you do is way too risky. Like if I work in an office and I'm a roofer, like they gotta charge different rates for that.
I
Right?
got
Because the thing about workers' comp that you got to think about is workers' comp covers you while you're on the job, right? While you're working.
you.
Health insurance it's everywhere. It's like it's health insurance, right? It's like
Yeah.
I gotta go get a checkup. I gotta go. So like what I do for work doesn't really affect it that much because that's what I have workers' comp for. Like my workers' comp covers me for like the work stuff if I get injured at the work, right?
Yeah.
My health insurance is more like personal. I'm playing
Gotcha.
basketball, I get injured, I'm like, playing with the kids, I slip and, twist my ankle, I got to go to the hospital. That's health insurance, right?
Gotcha.
So that's why the scope of work isn't, you know, I don't know. I guess I can't say like it's not looked at all, but that's not really what matters. It's more like the health of the group again, right? Going back to like
Okay.
the health of the group because that's what drives how much they're going to use the policy, the health
Age
insurance.
and health. Okay. Those are the same conditions for life insurance through age and health. Those are the parameters of consideration. But you said something that I took a note on real quick because it might be the answer to what I'm looking for. Because you said something about risk. And so I understand insurance is a business within itself. So they're like, look, if we got a bunch of risk, we might have to raise this premium up because the likelihood is we might be shelling out more bread for this particular person. So my question was, is that why auto insurance goes up? That
Yes.
because I had a fender bender. This is like a slight tap in traffic, right? It was like back to back. One day somebody did it to me. The next week I did it to somebody else by accident. Same thing. Had to get my car fixed, file a claim, and then we switched carriers. and they were like, "Oh yeah, for this guy, we're going to spike that up just a little bit, about $50 or so a month because of the claims." And I'm like, why don't happen in health insurance? If I get sick 3 times in whatever, I'm still paying the same premium most, next year for the most part, give or take, maybe a smidgen from older, but so it's the risk. After a
It's
while, you come off as you're a risky dude. So
it's all the
it's gonna.
risk and it's the laws, bro. The laws have changed. Look, back in the day, I don't know if you noticed, but back in the day with health insurance, if you, I have this example. I had a client that had an amputated leg. So she had like she had a prosthetic, she had a prosthetic leg. Sorry, she had a
Yeah.
prosthetic leg. So the her Blue Cross policy excluded her left leg.
What?
So if she ever had a claim for her health insurance because of her left leg, they wouldn't
Oh,
cover it.
okay. So there's like, now you don't got no left leg.
You ain't got no left leg with us. Your left leg does not exist with the organization. Bro, they used to be able to do that. And then the laws
It's
changed.
not funny, but it's funny, man.
I know. Bro, it was hilarious to me. I was like, how could y'all do this? Like, this should be illegal. Like, you're just removing the leg. So if anything, so I asked them, I was like, so wait a minute. So you're telling me if she falls because of her leg and she gets injured because of her leg, you can't cover it? Well, no, technically, like we're not supposed to because like the cause of the loss was. I'm just like, wow, this is
We
like
can't because
wild.
it's already gone, so we can't cover it.
But I'm
But
like, yeah, but there's still like implications, right? There's
I
still something
know,
like getting a new prosthetic, like
right?
going to the doctor to get it checked out. Like all that stuff has to happen still. And
Yeah,
so, but health insurance is like, no, that's gonna happen often, and we don't want to cover that. So the laws changed, and they're like, you can't do that anymore. The government was like, health insurance companies cannot do that anymore. They can't pick and choose what they want to cover. Like you got to cover everything no matter what. The only thing you can charge off of is their health, is no, I'm sorry, is their age and their and basically that's it. Like not even I don't even think the weight is something right now with health insurance that really I think it's age and if you smoke or not.
okay.
I
So
I'm pretty sure that's like the factors right now.
with the claims for health, I mean, I don't really know how to. I'm so used to, if you got insurance, you just go see the doctor and they
Right.
get billed, and I don't
Right.
know if that's considered. I filed a claim because I used
That's a
insurance.
claim.
That is okay because I used insurance money to
The
get something
doctor
medically done,
the doctor submits the claim. The hospital submits the claim
and they get the money
and
to
they
to,
get
to, to
paid.
okay,
And they
okay, that
get
makes
paid.
sense.
Yeah. And then car insurance, the thing about car insurance, and I'm gonna tell you something too. It's such a different business with health insurance because those claims are negotiated. Whatever we're gonna pay out of like Blue Cross Blue Shield has a certain amount that they pay for certain things. So when you have Blue Cross, that's why some hospitals will be like, well, do you have a PPOH? Like all those questions, it's because they're like, we either take this or we don't take it because like Blue Cross pays us the best. So that's why we take Blue Cross. Aetna doesn't really pay us much, so we don't take Aetna anymore, right? Because that's
Gotcha.
the negotiated prices. That's what these
Mm,
carriers do. These carriers are like, look, we'll pay this much for this procedure. When we pay out of pocket, we end up paying more because we don't have the negotiated prices that they have. So
right.
that's why those claims are handled over there because they have codes for everything. They're like submitting those codes and they're filing a claim. Like therapists, they file a claim. Like they're filing a claim to your health insurance company.
Well,
Like
who? I mean, this might be off topic. I don't know. It's negotiated claim prices, or I don't know if
yeah,
this is more of just a procedure cost, but I never forget. Maybe 2.5 years ago now, maybe 2 years. My mom was had stage 4 cancer, and I remember on the phone during the like setup of all this. She's about to do the procedures. They're like, "Well, we can get started as soon as we wait for your insurance to cover this one more medication." And I was like, "Well, what is this medication?" It's like it's the chemo medication, the main one that we need to attack the cells. And I was like, well, how much is that? She's like, $100,000. And I was like, what? Like that's the price for this one medication. And my next question is who set that price? Like whose yacht are we buying, collectively buying all the cancer patients of
Pharmaceutical.
the world?
That's the pharmaceutical companies.
Yeah, I'm like, dude, that's an expensive claim. I get it, you're trying to live. So they like, okay, we're gonna jack this up. But it's jacked up, but it's messed up. I'm like, dude, like
They're
what's
like, I think to them, they're like, they're gonna pay it. So
gonna
like
run
that's
it
what
up?
it is. Like, and then the insurance companies, I don't know if they pay 100,000. They might pay 80.
Mm,
You know,
okay.
they might pay 70. They
Behind the
might pay
scenes. Yeah.
50. Who knows? But like there is negotiations. There's also, I'm gonna tell you something. There's negotiations and claims even for like homeowners. Like if you have you ever had, there's people that walk around and they're like, hey, you need a new roof, right? They'll be like, hey, you need a new roof. I'll get you a new roof, right? And
Mhm.
so these are called claims, like claims adjusters.
Okay, yeah, I'm familiar with
And
that.
they'll
Yeah.
go, and what they'll do is they'll make you sign a paper, right? You signed the paper and you gave them authority to file the claim on your behalf, right?
Mm,
They call the insurance company. They say, "Hey, I'm from ABC Adjusting, and I'm representing homeowner policy number whatever. Um, we need to replace their roof." Then the insurance company is going to say, "Well, wait a minute, like why?" And then they're going to say, "Well, there was a storm that happened like 6 months ago, and that storm actually affected this client's roof because they were insured with you during that, so we need to file a claim." The insurance company is going to say, "Well, wait a minute, let's look up that storm." And they're going to say, "Well, look, we see that there was a storm, but it wasn't that strong in that area, so like I don't know, show us the damages," right? Then they're going to say, "All right, yeah, here are the pictures, this is it." Then the insurance company says, "Well, I don't know, I think that's wear and tear. Like we can't cover wear and tear. That's not because of the
yeah.
storm." Then they're gonna say, "Well, no, like let's negotiate this part." Like the adjuster can say, "Well, no. What about this part of the roof? Can we cover it at least because this had to be because?" And then the insurance company say, "Well, no, I don't know. Let's see our guidelines." So even in claims process, there's some kind of like I don't want to call it negotiation, but there's communication to figure
Yeah.
out if we're going to cover this claim or how much we're going to cover this claim for, or if we're just going to deny the claim period. You know, so even for auto insurance, like they send their own people out there to look at the damages and they're like, "All right, how much was this damage? Let me get the quote you got from the repair shop.
Right.
This quote doesn't match up what the damages were. I don't know, something's off. Go get another quote or go to one of our people that we work with." So there's always claims. It's an interesting process.
So is there a time limit with claims? Like, for example, let's say my car's outside, Chicago gets one of those storms where hell is coming down and it cracks my windshield in my car. But do I have to report that like the next day to get car insurance covers, or it's 6 months? I'm like, you know what? I just forgot to call them. I'll call them there. Where they'd be like, it's too late. Is there
I
like a
mean,
time window for that or to file a claim with certain things or?
I mean, that's a good question. It's just like my response to that is always like just file it right away. Like if you're thinking about filing the claim, just submit the claim because the longer you wait, the less likely it is that the company's going to cover it.
Y'all hear that, listeners? File right away.
You know,
Don't
just
procrastinate.
yeah, just file it. Like because it's like if you don't, now here's the thing though, like there's certain carriers that if you file a claim and it's not paid out, that still goes against you.
Really? So if I'm like, hey, something happened, and this is just for auto, right? I'm guessing like, if you file the claim, like, oh, I need a roadside assistance, tow me to somewhere, and for whatever reason they cover it, don't cover. I don't know, whatever, but it's still the next go around when it's time to renew my insurance. I'm gonna say, hey, you filed a claim for a tow truck back in whatever, so your insurance is gonna go up.
It can.
Man.
It can. Look, something as small like that, it might not. Like it might, like you
Uh,
might not. rates always go up. I always tell people, look, just expect rates to go up because it's inflation. Like they're always going to go up because these companies need to make money and they're like the dollar is worth less, so we need to charge more for our insurance. That's something that happens no matter what. So
Yeah.
without a doubt. But when it's let's say maybe if you did one, it's not a big deal, but let's say you did five towing claims.
Yeah.
Bro, those towing claims, they're cheap. It's like $150 each time. Like it's not that much. The insurance company isn't losing that much money, really.
Yeah.
Um, but they kind of are because the administration costs. Because it's like not only are we like not only are we find this claim, someone's keeping track of the claim, like our departments are like opening up to this, like you're adding something to our docket that's costing us money. That's how they look at it, right? So to them, that's not favorable. You're more likely to have a big ass claim because,
Yeah.
or you're more likely to have a huge claim because now you're consistently filing claims, right? So
Yeah.
you're not favorable because they're like, look, like this person keeps like running out of gas or like just the most like they're filing claims for the most like basic stuff.
Dumb
Like
stuff.
this
Yeah.
is a high risk. Like this is a high this is a high risk and we don't
Yeah.
want it because they're more likely to file a really huge claim. So it's like it's called frequency, claim frequency.
Mm,
That's what they
claim
look at.
frequency
Yeah, that's what
makes
it's called.
sense.
Yeah, they're like, how many claims do you file? Even in your home, if you file, there's companies, if you file more than two claims for something like your roof and it was never covered, they'll drop you.
That was my next question. Can they eventually be like, you know what, we don't want to cover you anymore.
Yeah, they're like, yeah, we
You
don't,
know?
yeah. They need to give you time. There's laws that they need to give you times, but they'll be like, man, you're risky. We don't want to pay
Yeah.
for your claims. We do not want to pay for your claims. Like,
I don't know if that happens with life insurance per se. Like, if you're healthy, they'll cover you. If you
right,
get sick 10 years down the road, like really sick, I mean, I guess they're expecting, I mean, that's the risk they run. They're like, okay, if something happens, we're gonna cough up this money.
right.
But they can't be like, hey, uh, we seen a report you caught HIV and you lost a leg 3 years ago. We're gonna drop you now. Like they can't
But
do that.
that's why there's term insurance.
Yeah, I
Like
mean
I
that's
think
the
that's why there's
term.
term because like if you don't file a claim in these 20 years or
Yeah,
30 years or 10 years, like you don't file a claim, we're gonna re-underwrite you and we're gonna see if it's worth insuring you. Or
yeah.
or if you don't want to get underwritten, we're just gonna bring up the price like 300%. Like the price goes up a ridiculous
Price goes
amount.
up after that term. It goes back up higher because you're older. Chances are you're closer to croaking now than you were 20, 30 years ago. And
Right.
so insurance is through the roof, and once a 20, 30-year term is over. And this crazy part is I've had people so mad and back in my final expense days where like, I had $100,000 policy through my job and I retired. I'm like, yeah, well, that insurance retired with you. You know what I mean? So you don't have that anymore. And so now you got to pay out of pocket a crazy amount for like just 20 grand of coverage because you're now in your 60s or 70s. And yeah, it's a big different risk tolerance at this point. We know you are going to expire
Right. Well,
soon. So
I think that's why life insurance is kind of like so like it's direct because it's like, look, this is what we're covering and that's it. Like I think when you think of a business owner's policy,
mhm,
like bro, there's so many claims you can make on a business owner's policy.
too many.
Like that's why there's underwriting guidelines because there's so many different factors in claims, right? So like something big for like a business owner's policy is like theft, right? Like you don't know when someone's going to try to break in there and try to steal something from that place. So actuaries look at the data, they look at crime rates in neighborhoods. And so I've had companies that are like, we're not going to insure in that neighborhood.
You want to open up this jewelry store in Inglewood?
Yeah,
They're
they're
gonna
like,
be like, nah,
look,
nah.
if you want, they might be like, look, if you want, we'll insure it, but you need to do a $50,000 deductible.
Something. Okay.
So that way, if there's any claims, you're covering part of the claims yourself.
That makes sense. That makes sense.
Right. And
Yeah.
so they'll give, or they'll be like, hey, we don't want to insure this, but we'll charge a lot of money for it.
Yeah.
If you're willing to pay, it's like the pharmaceutical companies, right? It's like if you're willing to pay, we'll cover you.
Yeah. Because they know they're running a risk. They're like, dude, you could get robbed and you're in a high crime area. You got jewelry, bruh. We are running a super risk that you're going to say, hey, I need $1 million, came out $1 million of jewels taken out of my store. And then it's the whole thing about insurance fraud. So, you got to, so yeah, I get it.
Bro, all that.
Why?
Listen, I,
Yeah.
I, I, this one gentleman who owned a tire shop, I'm not gonna say the name, owned a tire shop, like a rim and tire shop, non-stop claims back to back, like non-stop, non-stop. Finally, no insurance company wanted to insure him because they're like, you know what? He's doing it himself. They were all like, bro, like bro, I had underwriters being like, I don't trust this risk.
Yeah.
And I learned this was probably like my beginning, like couple years in the business where I'm like, oh, insurance fraud. Like people file claims, they'll act like something happened and they'll be like, oh, I was robbed. And then they'll file the claim. But guess what? You get locked up for that. Like
Right.
like you'll get in big trouble for that. Like you'll lose everything because you tried something slick. Like, what are you doing? But it's like like that's where claims, it's such an interesting like subject with business insurance and all these other areas because there's so many intricacies and there's so many people that are trying to like gyp the system in some way, shape, or form, but they end up hurting themselves, and that's why insurance rates go up,
Yeah.
right?
Now, who handles the claims with property and casualty? Like, no, let me say, with life, they may call me the agent just because I'm the familiar person that is, what do I do again? But that's it. But I'm saying, hey, you call the carrier. You know what I mean? Like, you got to tell them the info. They just call the carrier. I don't know if this is true or not, so you can educate me on this. With property and casualty, are people, they're not calling a carrier necessarily, they're calling you guys. They're calling you the agent to handle various intricacies or no? How does that
They
work?
call the carrier.
They call the carrier, okay.
Every carrier has their own claims department.
Gotcha.
Every carrier has their own claims department. So even like, let's say I insure a workers' comp policy for someone, right? I write a workers' comp policy for someone. Actually had this happened recently. I issued a workers' comp policy. One of the employees cut their hand.
Oh crap.
So I got a phone call from the client. Hey, one of our employees cut their hand. I'm like, okay, well, so what's going on? Are they going to the hospital? No, they're not going to the hospital. Okay, like how bad was the cut? It wasn't too bad. It wasn't too bad. Didn't have to go to the hospital. No stitches. I just don't know what to do. Right? Every company should have a reporting tool. Right? Every time someone is injured, you're reporting it. You're like, okay, this person was injured this time. This is what happened, and you're notating it, and you have like an injury report of what happened. So that's
Yeah.
number one. That way you have it documented. Because guess what? That employee could go home, go to the doctor, and say, I got injured at work. And then they could say, like, I can't move my arm anymore. Oh, who knows if they're lying, but that I can't
Yeah.
move my arm anymore. And then the doctor's like, oh, shoot, what happened? Oh, I got injured at work. Okay, great. The doctor immediately, the hospital,
Claim.
they file a claim. They send a notification to the state and they say, hey, this person was injured while they were working at this place. The state is like, okay, cool. The business gets a letter saying, yo, one of your employees was injured. What's up? Who do you have? Right? And then your job is to file that claim. After that, now you have no other choice now. Like you got the document from the state,
Mm.
you file a claim to your insurance carrier. Now the carrier investigates. The workers' comp carrier says, okay, what happened?
Yeah.
Here's the report. Oh, okay, cool. They got injured. Okay. Oh, it was their right hand, but they're saying their left hand. They're saying their left arm can't move. I don't know. I mean, it was the right. It's right here. Okay, interesting. Goes to the injured party. Hey, so you said you were injured. So what happened? They explained, oh yeah, my left arm, I don't know, I just kind of hurt it while I was like working. Well, we have the injury report, and it says here that it was just your right hand. So when did your left arm get hurt? Like what happened? Oh, shoot.
Mm.
That's the claims process for workers' comp.
Got you. That makes sense. It just makes sure people ain't trying to pull a fast one. I get it. It's a lot of money involved, a lot of risk involved. And so people don't like underwriting. I know it's the worst part of an application is like, have you had this disease? Have you had this sickness? Have you? You just want to say no, 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 no. But hey, we're talking major figures here that we're going to cough up to
Well, that's what it
somebody.
is. In the state of Illinois, there's no limit. There's no limit to how much gets paid out for workers' compensation.
No limit.
There's no limit.
So it's like it wouldn't be based on like their annual, like their income or something.
Yeah,
Like they
but
can't be like,
like,
"Hey, I
but
got hurt. I need $1 million." You
but
know?
not that. So it's more like hospital bills,
Okay. What
right?
all be
So like
covered?
like hospital bills, physical therapy. There's a lot that goes into after an injury, and there's no limit to how much the company's going to pay to make sure that person is back and up and going and good to
And
go.
those are claims. So is that like one claim to go to physical therapy for like 6 months, or is it like every time they go, they have to
Technically,
claim it?
that's one claim, and it could be.
Okay,
I've seen claims that one claim $300,000. One claim.
gotcha. So
I've seen.
that's the difference when I never forget when I was in an accident years ago and I got the drunk driver hit my spine. Um, my insurance covered 6 months of chiropractic treatment and 6 months of physical therapy. I had to do physical therapy first, then the chiropractic stuff. After the chiropractic 6 months portion was over, I was okay. I was decent, but the doc was like, I still could probably see for like 2 more months. You're not all the way there. He's like, but he was literally just like, just shoot me like $25 a visit and I got you. Like, because he was like, I already billed the insurance company for what I could. I got paid that at a much higher level. I probably overpaid me. Who knows what the negotiation was, but
Right.
just saying you cool and you still need some adjustments, like just
I got
slide
your
me a
back.
little bit. So that right there is like it's not a claim. He just like just pay out of pocket a little something,
Right.
something just to get you
Right.
right. So is these aren't I don't know. Are these set prices like hey, chiropractic treatment for L3, L4 spinal
Yeah.
injury
Same
is
thing.
three
Like
hundred
like health
thousand?
insurance.
Or is it like negotiated every single case? Is
No,
there
it's not every case, but it's like what's your rates? Like the workers' comp carrier is going to say, "Yo, what are your rates?"
okay?
Boom, boom, back. Okay, cool. Like take care of this person. How long is it going to take to take care of them? 6 months. Okay, great. Like that's
Yeah.
like what the doctor says, and that's why so if the case is over, but you're still kind of feeling something, that's different. You know what I mean?
Okay.
Like the case is over, like it's closed out. You said you're good, they said you're good. This is how much we're willing to pay out. You accepted that. Like, all right, cool. Like we're good to go. So that's it's man, we could honestly talk about this. We're out of time, but we could honestly talk about
Well,
this.
right. All right, one more question.
Yeah.
For not reoccurring medical claims, let's say, hey, you got something, flares up, file a claim, you get medically, that is covered, and then it reoccurs 2 years later or three. I guess at those points, does your health insurance increase because you're kind of starting to become a frequent flyer over a 5 year period, or does it just is it conditional or is it like tiers to like okay they've done this 2 or 3 times. Like I know hospital indemnity plans kind of work like that. Like you get a certain amount of coverage
Right.
per year, how many
Right.
times you see the doc. I didn't know if that was the same situation with property, casualty, or anything like that. Like
Yeah.
if I own a building and okay, I got the roof done, and then I had a basement flooding the next year, and then the third year I got some window cracks sealant that was is not wear and tear, but it's something else. And like after like something like that, does the insurance carrier be like, man, this dude is filing a new claim every year? They're legit claims, but maybe we need to spike this up a little bit.
Absolutely.
They do. Okay,
Abs-
okay,
absolutely.
okay,
Absolutely. They call that your loss ratio.
okay,
What's your loss ratio as an account? And they check it all property and casualty. That's how they check it.
okay.
So they'll say, how much did you pay in premium? let's say I paid $100,000 in premium so far, and I've had $50,000 in claims. My loss ratio is 50%.
Yeah.
Right.
Makes sense.
So now let's say I have another 50,000. Now it's $100,000 in claims. I'm still in the first year. I've only paid $100,000 in insurance, right? My
Yeah.
first year. I've already had $100,000 in claims. They're at 100% loss ratio. They made no money off me.
Yeah.
Next year, right, my prices are going up.
I believe it.
You know what I
Yeah.
mean? If I only had 50,000 and it stood at 50,000, 50%, they're like, okay, that's not bad. Let's see what happens next year. Next year, no claims. Okay, loss ratio goes down a little bit. Let's keep it like that. Let's not mess with the rate. Let's keep them happy. But now I'm a baker, right? All the bakers that are insured under this company, they all had claims. So now the insurance carrier is like, damn, we don't like these bakers. We got to increase rates for all bakers.
Yeah,
But I didn't have any claims. We don't care. You're a baker. You're part of this classification. We're increasing rates for everybody in this class. Go find another insurance company. That's why there's so many carriers.
That's why you got to shop around before
That's
you
why it's important
lock
to
in.
shop around your business insurance in those things, because there's probably more options out there where there's a company that doesn't have too many of that classification. They haven't had too many losses, and they're okay with writing more of that because they haven't had too many claims.
So for the viewers, we're wrapping this up. We're
Yeah.
out of our time, but
Yeah.
just to let you know, if you're in the market for a certain type of product, you got people like myself, you got people like Edwin, who we are brokers. So which means we are connected to several carriers. We will do all the shopping around for you and find the best solution that's going to be tailored to what you need. So that's what we become from. You don't want to become a frequent claimer and things like that. Then let's find you the right type of carrier that's going to fit your need, that's get you right where you need to be. So this has been a good conversation. I learned some stuff. I got a few takeaways, but I'll just leave one at, man, you don't want to be a risky claimer. Like you just don't want to be, especially when it comes to property and casualty. It makes sense. It makes all the sense. I mean, you do want to have the insurance for just in case because you don't want to come out of pocket. But now I see why some people say, oh, that was a little something. I'm just going to take care of that myself because they don't want their rate to go up. They don't want to call you for every little thing. But if there's something major, shoot, file that claim for sure. So that was my biggest takeaway from this conversation. What was yours? What's your biggest takeaway?
Yeah, man. My biggest takeaway was what you said about, like, there's more ways to file a claim on a life insurance policy than one. Like besides like dying, and like just to be, I don't know, I can't think of any other way to say it, but like I wonder how many people yeah, like you're still alive.
Unalive me.
Yeah, unalive instead of unalive. Like I'm like, you're still alive, so like what kind of benefits? So I think for me the takeaway is like like looking at my life insurance policy and like making sure, like, all right, like what do I have on there besides just like the mortality piece, right? Like besides like just the death benefit, like what else can I make sure that I could be covered for in case something happens, or like even like my family, someone asks me, like it's just like, oh wow, like especially like for people out there right now, like watching this, like if you don't have anything in place, like you should have those additional like cushions and those layers that can just give you that extra, like just that extra protection, because like you never know. You never know what could happen. And if you could get some money in a crunch where you're in a situation where you're like, man, I can't take care of myself, and I have someone taking care of me, and so like I could use this support. If you have the right policy, you'll be good, But if you don't, yeah. So you might be able to file a claim. That's I think for me that's my biggest takeaway. It's like there's more to it than meets the eye, and
Sure.
yeah, there's more to it than meets the eye. So especially with like the life insurance piece.
All right, ladies and gentlemen, that's our time. Thank you for watching another episode of There's Insurance for That. Tune in next week. We'll be talking about a completely different subject. We want to help you learn. Thank you. Like, comment, share, subscribe. Watch the post, watch the shorts. We in here.
Yeah, we in here. Peace out.
Appreciate y'all. Peace.